Welcome back to Real Estate Wisdom Podcast. This is part 2 of Mortgage Wisdom, where we're sharing all the thoughts about how mortgages work, what kind of options are available, and Tyler Lipinski, we will continue talking to him. First-time homebuyers. That's my favorite topic, right? Are there any specific programs or incentives available for first-time homebuyers in Canada?
So, the honest answer is yes and no, right? I think sometimes that first-time homebuyers think that there's significantly better rates available for them, right? Like we're talking 1.5% to 2%.
Oh, really?
I've had that conversation with the client before. And I'm
Wow.
like, well, there's
And why did they think
some
that?
misguidance. I think you hear first-time homebuyer, and I don't know if this is just what I've understood, but I think that there's just everyone is always talking about incentives for first-time homebuyers and programs that exist for first-time homebuyers, but it really isn't anything too crazy from a qualification perspective and an interest rate perspective that you'll be getting by being a first-time homebuyer, right? The typical first-time homebuyer doesn't have 20% available for the down payment, right?
Sure.
So right off the bat, we're looking at an insured style transaction as opposed to an uninsured style transaction, which typically just means that you don't have access to that 20% down payment. So you'll have less than that. And then within that world, you're looking at purchase prices of under $1 million, right? The real biggest thing that first-time homebuyers get to take advantage of is with respects to some savings, right? So on land transfer taxes, there's the first-time homebuyer discount, which is massive, right? If you're in Toronto, you're getting the municipal and the provincial discount. If you're outside of Toronto, you're getting the provincial rebate, right? Which is awesome.
Yeah.
And I hope they never get rid of that, and I don't think they ever will, because you can save a lot of money on those land transfer taxes. You of course have your first-time buyers plan with the RSPs, right? So you can take out $35,000 tax-free,
and that per spouse, right?
Yep.
So if it's joining as a spouse, you get the $70,000 tax-free money which you can borrow.
Huge, right? Yep. And then there's some newer first-time buyer accounts that are coming out.
Yes. FHSA.
Yes, exactly.
Yeah.
I haven't seen very many of my own personal clients really take advantage of them yet, but I think it'll be something that will become a lot more popular down the way.
Yeah.
But yeah, I mean, and there's
I think a specific goal is about you're saving for the first home.
Of course.
Basically, that's what's going
Exactly.
there.
Exactly.
And the tax-free income.
If you've purchased a home, what are the incentives that exist for me? It's really just a land transfer tax rebate that you can get. And then sometimes there are some lenders that might do a first-time buyer cash back, right? Where they'll give you a little bit of money to help with closing costs.
Yes.
There's all those different types of incentives that exist all over the place, right? But yeah, and there's, I'm trying to think, there was another one that I wanted to bring up, but I can't really remember it off the top of my head. But yeah, land transfer taxes is the best one in terms of getting discounts for.
And the first-time home buyers, in order for you to qualify for first-time home buyer program is neither you or your spouse have been on a title anywhere in the world. Okay, so it's not only just over here, anywhere in the world. But there's also, even on those cases, I have seen different kind of how people get creative about it.
Yeah.
But
you can get very creative.
You can get creative about that. So don't quote me. Like I said, normally disclaimer over here, what we talk about here is not the financial advice. Hire the professional for that. Or it's, so that's a disclaimer, which we always put over there. And this is what experience what we have, talking to professionals. And I love to recycle knowledge. And that's what we're doing over here, to working out each other and helping our clients. So in terms of a first time of us, and there's anything else? I was just talking to give you some time to think about that, so they can get benefit. All right.
Well, there definitely is. When we talk about insured versus uninsured,
yes,
you can get access to better rates, right? That's just the facts, right? So especially from a variable perspective in today's market,
right?
There's a lot of people that might say don't look at a variable option today, but I challenge it, right? If you have clients that are a little bit more open to potential fluctuation of payments for a short time, take the variable rate today because you're going to have significantly lower variable options
And you can lock it
on
anytime.
the insured, than you can on the uninsured, right? I wouldn't really recommend right now for anybody on the uninsured space to go variable unless the discount is significant. But on the insured side, with less than 20% down payment, purchase price under $1 million,
Right.
you can get access to some really, really great pricing. And if we're talking specifically about variable interest rates,
Right.
when we start to see those decreases, if the first one is Q2 of 2024, that person who's on variable is going to see the benefit, right?
Oh, for sure. But before I go over there, like so as you mentioned about insured and uninsured, a lot of our viewers and listeners, they might not know what that means.
Right.
Okay, so can we do like a little bit basic?
Yeah.
That, like what that means?
Yeah, for sure. So specifically related to purchases, right?
Right.
You're either going to have the option for an insured style transaction or an uninsured style transaction. Uninsured style transaction is where you have a purchase price over $1 million,
Right.
20% or more available for the down payment.
Right.
And that's going to give you access to a 30-year amortization.
Okay.
You have the option to take a 25-year, but you also have the option for
So when you say insured, basically, who's funding that? Like, how is get insured?
So the easiest answer for it being insured is that it's backed by a mortgage default insurer,
Okay.
right? Like CMHC, for example.
for example.
Probably one that a lot of you guys have heard of in the past.
Yeah.
They will protect the lender against any sort of default against the loan.
So basically, they're protecting the lender.
Exactly.
Not you, the lender,
Yeah.
but you have to pay for that insurance.
Exactly.
Because if you're going to get default, because you're insured, that will cover bank that mortgage. And that's why they're able to lend you more.
Exactly.
Right?
Yeah. But that's also the same reason that you'll see more favorable interest rates
Correct.
on the insured space.
Yes.
Because there's more protection there, right?
Oh, for sure.
Right. So you pay for that insurance premium as it gets added to the loan amount. So it's not like you have to write a check out to CMHC and say, hey, here's for the insurance premium. It gets added to the loan amount and incorporated into your monthly payments.
Yeah.
Right. I think comparing that with the uninsured, the biggest difference, of course, is the insurance premium that gets added. It can be expensive once you start getting up. You know, if you're purchasing a home,
Let's say about like $1 million.
yeah, if you're purchasing a home 999 with 5% down,
Right.
it could be very expensive for you, to be honest with you. And then you have the tax that gets added onto that insurance premium as well.
Oh, really?
So yeah, you could be looking at a very large number that gets added to your monthly mortgage payments, which of course will increase mortgage payments and decrease cash flow. And with insured style transactions, you're looking at 25-year amortization maximum. You cannot have an exceeding insured style transaction that goes beyond 25 years from an amortization perspective. And that can make a big difference too, not only from a cash flow perspective, but qualification perspective.
Yeah.
Right? It's a lot easier to qualify for a home on the uninsured space than it is on the insured space because we're getting access to 30-year amortization and we're eliminating that insurance premium altogether, right? So the loan amount is automatically reduced, right? So, yeah, I think it's case by case. Like I have some clients that have the ability to go either way, either route, but we do that financial analysis to say, okay, here's option A if you go insured, here's option B if you go uninsured.
Right.
Here's how much you would save if you go either route.
Yeah.
And then the client, look, let's be honest. As a mortgage agent, I'm here to give advice and to let that client make the educated decision.
Oh, for
I'm
sure.
not making decisions for anybody.
Nobody, it's same thing.
Yeah.
And our business is our job is like more like a consultant.
Yeah.
We give you advice based on your scenario, and choosing the right path is still your decision to make. So never feel like a pressured.
No.
And like some salespeople use that kind of tactic.
Yeah.
Fear factor, and if you're not going to do this, this is what's going to happen, and all stuff. Don't fall for it.
Yeah.
Don't fall for it, right? You do your due diligence. If you're not sure, talk to not one, not two, not three. And make sure you check their credentials, what their reputation is, right? And then you deal with them, because it's not easy. It's not hard. It's not easy. It is hard.
Yeah.
So that's coming to we talk about the first time home buyers. One question now, and in this current market, a lot of people are not getting qualified. Okay. So how can someone improve their chances of getting approved for a mortgage?
So that's a great question.
Yeah.
And one that I think I wish more people asked. Because there are ways to do that, right?
Right.
One of the first things is that if you if you have weaker credit, which a lot of Canadians are going to have right now,
Yeah.
because they've overextended themselves,
Right.
Some of them have lost their jobs. There's a lot of people that have racked up that credit card debt. It's about how can we position you in the best light possible, right? So it might be a little bit of overlap with what we were discussing before, but clearing off some of that credit debt is really, really important, right? Making those monthly payments, don't ever miss a payment, because it looks terrible on a credit
Yeah.
application. A lender, you have to think about it from a lender's perspective. They're never going to want to give a mortgage to somebody who can't make a credit card payment, right? But one big way is to open up the horizons of options that you're looking at from a qualification perspective. So ask your mortgage agent, what about if we went with a B lender, right? I have a client, like, instead of waiting a year to rebuild your credit, you can still buy a house today with an alternative lender whose policies may allow for a weaker credit score to be on the application, right? Same thing with credit unions, right? If you can't qualify for a home today, let's look at a credit union where we avoid the stress test entirely.
Yeah.
Again, transferring some debt. One trick that I always like to use is if you have a car loan, and it's a major hindrance on your application, not allowing you to qualify up to the amount that you'd like, you can transfer that car loan to an immediate family member. Or to a spouse that might not be on the application. Eliminate the need for that monthly payment to remain on your personal credit bureau. And behind the scenes, if you need to pay that still to your friend or family, you can do whatever you want to do, right?
Well, that's a very smart advice, and I will probably use that for Insta Reel as well. Those tips, and those are like a valuable ones, because a lot of people have cars and they have car loans, stuff.
Of course.
In my case, it happens. I remember I went for like my renewal was coming in, and we sat down with the financial planner. The mortgage guy, who I was like, I still with bank. I got the great service and stuff. So, when he looked into that, he says, "You paying 2.5%. I believe that was the number for here.
Yeah.
For mortgage, you're paying 1.75.
Yeah.
You still qualify because you built up your equity and everything. Why don't you merge it?"
Yeah.
So we merge it, we save some money because that was free.
Yeah.
And my credit scores go well as well.
Yeah.
I was just talking, it's come to something in my mind, which one of the persons said, I'd never heard about that if you close your credit card, does it impact your credit score?
Yeah. So I have seen it where it will decrease your credit score.
Yeah. I was like, why?
Yeah.
I'm just taking away. I don't need that credit anymore.
Yeah.
But when you're closing it.
So it's the way that the credit score system works is a little bit bizarre for one easy way to say it. Yeah. But that is definitely true. If you have a credit card that you're not using, hey, you might be better off to just leave it alone, as long as there's no balance owing on it. Right. Just leave it alone and don't even bother closing it off.
Bother closing it off.
Another thing too is accept those credit limit increases if you're able to.
Yeah.
Because sometimes that can help improve your credit score.
Yeah. It's recently happened. I have this credit card which I use for my business transaction purposes as well.
Yeah.
So I just keep it in the track of that easily. And then recently I got you qualify for this much. It was like $5,000 more. And so first I thought, do I need it?
Yeah.
Because then I did it, right?
Yeah.
It's like, okay, because you're accepting it. And the reason they reach out to you because you doing your payment regularly. They know they're lending to somebody who can pay back, 100%. Right? And they're not going to utilize more than what they don't have.
Oh,
right?
for sure.
So I make sure that I have in my checking or saving account enough money that I can pay my debt.
Yep.
So Well, that's the great advice, like in how they can improve. Is there any other thing which you want to add to
From an application
application
perspective
purpose? Yeah.
itself.
What common mistakes people do? I think like that's really good.
Okay, so this is a good one. Well, it's not necessarily from a qualification perspective,
Yeah.
but it's really important, I think, to talk about is what.
So let's stick to that one over here. What else they can do, and then
yeah,
probably
okay,
can get
okay,
the
okay.
question. Yes. Yeah.
Okay, yeah. So I mean, unless you're cosigners are a great example too, right? I was going to say unless you can find some way to increase your income, there isn't really much to do, or get an additional gift from a family member for the down payment, right? Which is something that we've seen happen a lot over the last 3 years, right? Because it's become very difficult to accumulate the funds that you need to purchase that home, right? People have lost their jobs.
But we were just talking before. Is that the venue for the money laundering as well?
Say it again.
It can be the venue for the money laundering as well.
Yeah. There is so much mortgage fraud and money laundering that happens in this industry, and I don't even think a lot of people know about it, if we're being completely honest.
I was reading that I don't know if it was the Toronto Sun or somewhere the article was like in the Vancouver. It was the Tim Huducks from Oria. Think like how much mortgage fraud happened. It's around, I believe, $40-50 billion something. I'm like, wow.
That doesn't surprise me at all.
Because all the money was like getting dumped and stuff, and so it's a big issue. We were talking about that. We're going to that separately. But let's not going into that path.
Yeah, so
looking into that
cosigners. Cosigner is a big one. As long as the cosigner is a strong candidate, right? We don't want to have somebody that's overextended themselves from a debt or liability perspective,
right?
Or somebody that's got 10 properties with a mortgage on every single one of them. The ideal cosigner is, perhaps a sibling or parents, or aunt or uncle that maybe has a home with a smaller mortgage on it or no mortgage on it at all.
Right.
Very little debt, but some strong income, right? And we've seen, again, I had to add a lot of cosigners onto my application, or again, gifted down payment increase.
And this is the best gift you can give to your kids or your relative who you trust, right? And help them out like with this thing over here. On the same thing, like, do they have to be there for the whole mortgage term?
Well, there's something. So, okay, the answer to that question is yes.
Yes.
A cosigner will have to remain on for the term that they're on. And if they want to remove them, they can look to do so before, and they might have to break that mortgage.
Right. And then you have to requalify the person.
Exactly. Right? Or after, let's say they did a 5-year term, just for example, at that 5-year mark is up, then you would hope, or if you make an arrangement with the cosigner, will remove you at the end of the term.
Right.
So now we have to ensure that the applicant who's actually living in the home qualifies to remove the cosigner. Right.
So
and it happens all the time. And that's why, if it's a 5-year term.
That's probably happening with the separation issues these days as well.
100%.
Right?
Absolutely.
They both have to qualify.
On their own, right? Or if somebody wants to stay in the home, we have to refinance the home, and they have to qualify for that refinance, giving them access to as much of a mortgage as they can, right? But it's something that we do all the time. So if you take a 5-year term and you have a cosigner, I have conversations with my clients at the 3-year mark. Hey, we're 2 years away. We're 2 years away.
Right.
What are we looking at now? Right. Let's have that conversation. Are we on track to remove the cosigner? Are we not on track? What are the goals? Have they changed? Let's have a discussion, right? So doing all that ahead of time is really, really valuable and important. And then same thing with a gifted down payment. You can still help your children qualify to purchase a home by using the equity in your own home, right?
Yeah.
So if you as a parent have a home that's worth, I don't know, $2 million and you don't have any mortgage on it whatsoever, we can add a line of credit to that home to give you access to gift those funds to your children for additional down payment, right? Of course, if the child has their own funds available for the down payment, it could be the difference of making them, qualify for only $1 million maximum to now we have 20% down payment.
Right.
We can qualify for something that's 1.2, which is where we want to be, right? I've even done it a reverse mortgage for gifted down payment.
I love that. I saw that. That's a presentation which you do, standalone presentation you had, and the misconception people have about reverse mortgages and how it can be useful, like especially people who are retiring and it's not. And also you just mentioned about that, like it can be a short-term scenario as well. Somebody lost a job, let's say, and they can utilize those kind of solutions as well.
Yep, exactly.
So we're definitely going to talk more about that one later.
For sure.
The one question people ask me a lot, like, it's especially, and sometimes they don't even know when they're going to, like, they want to go to bank because I have to pay the commission to a mortgage broker. It's a very like common misconception. I know, like, not everybody does that. In some cases, you have to do it. I believe. But what's your perspective, and what's the cost to
obtain a mortgage?
Obtain a mortgage.
Okay, so let's talk fees.
Yes.
Just because you mentioned it first, the mortgage agent fee.
Yes.
I don't have a fee, really, is what the basic rule of thumb answer is, right? We get paid by the banks directly.
Right.
So you can almost look at it as to say, if I brought an application to TD, TD is going to pay me by rewarding me for bringing the application to them instead of bringing it to CIBC or any other random bank, right? So there are mortgage agents that will charge additional fees. You don't typically see it with the A banks or A lenders, right? No. You typically see it a little bit more with B lenders because there can be a lot more work that goes into managing a B-style application. I can only speak personally. I do not do it. Just because, again, I feel that, we get compensated by the banks and I don't want to have to put any more strain on the client directly. The only real time that I'm charging any sort of fee on my end is when I have to, and which is on the private space, because private lenders typically will not pay their mortgage agents. There's some that do, but for the most part, that's the only time that I'm really charging a fee for my services, right? And it's a question I get asked a lot of the times too.
For sure. That's why.
Well, my favorite answer, right, is when I have a non-private deal and I say, "What's your fee?" And my answer is free. It's like, oh my gosh, this is the best news I've ever heard. But there's not supposed to be,
and it's like a significant, like 1% to 1.5%, like sometimes, right? 100%. And if you're getting the $1 million mortgage, like that's huge. Like it's different, right?
Absolutely,
you can save.
So mortgage broker fees are there, but they only exist really on the private space. And again, you can sometimes see them happening in the B world. Land transfer taxes is the biggest cost, really, one of the biggest costs associated with purchasing a home. And you get advantage of some of those discounts for the first-time buyers. Appraisal costs. Sometimes the banks will absorb that fee. Sometimes they will not. Don't. You're seeing them all over the place, really. It depends on the appraiser partner. I know that I have a couple of appraiser partners that I work with directly. And so sometimes they can offer discounts to my clients based on the amount of volume that I have sent to them over the past. But those aren't anything crazy, right? Unless you have like a very nice home that gets deep, an executive style home where they might charge it a little bit of an extra fee, or a rush fee if you're in a conditional period and you need that appraisal ASAP.
And especially it happens like when not a lot of comparables available, and then you have to send the appraiser to appraise that house because they appraise it like in the differently compared to what your realtor will do. So, and especially on those cases, it's better to get that kind of special custom houses.
Oh yeah, for sure,
big time, right?
For sure.
Yeah.
Do you know what we're seeing a lot of now though is homes being passed through the lender's auto value system. So saves the need for a full appraisal, right? It's cost to the client that gets saved. And then also it can sometimes be annoying to have to arrange an appraisal, right? Especially if you're not dealing with a vacant home, right? So we're seeing a lot of lenders start to go that auto valuation route. But there still is a small fee that might come off. Maybe it's like $299 that they'll deduct from the advance for this fee, as opposed to what could be $500, $600, $700 for an appraisal. They can get expensive and pricey.
And sometimes like those like fees, what I think, like, the saving you're going to make because of that, you will recover that pretty quickly as well. Absolutely. Some of them, like, and what I'm hearing from you, like it's not that significant. So those are the only costs.
And then if you have the insured style transactions with a default mortgage insurer, you have the insurance premium.
Yes.
That's a big cost. And then the tax with that premium. That, the one portion gets added, the other portion you would pay with the lawyers. Lawyer fees, legal
yeah.
fees is a big one too, for sure.
I know like a lot of people also include their municipal taxes, the property taxes included in the mortgage. Does it impact?
So I don't.
And usually it's like we're not significant, right?
Yeah, but they will charge sometimes a little bit more
Right.
than what the actual monthly municipal property tax is,
Right.
just to give themselves a bit of a buffer
Right.
in the property tax account.
Got it.
Right now, in that property tax account, if there's a big balance left over, they'll balance it out if you were to ever break that mortgage or sell the home, whatever the case may be.
Right.
But I always say if you're able to make those payments on your own,
Right.
just pay them yourself.
Don't
really.
bother.
Yeah, but you know, I understand the ease of having it all just looped into one. But sometimes people don't want to pay their property taxes monthly, right? Because they come out with the schedule, and I know you know all the cities are different, but yeah, sometimes you don't want to have to pay them monthly. You pay them as you need to, right?
For sure.
So, yeah, I don't think it's necessarily something that everybody should be doing. It's case by case. If you're more comfortable knowing that they're going to get paid, and you might be worried that you'll miss the property tax payment,
Right.
then yeah, for sure, you want to have them pay through the mortgage. But yeah, I don't think it's anything you need to do.
What about mortgage insurance?
How much time do we have?
Well, the thing is, like, we're recording this one over here. If I guess great opportunity and the ideas are flowing, and I can talk to you like at any time. I know that, like, with the phone we were discussing, and we end up
We said
talking
we needed to record our phone call. For
phone
the
calls, right? That's right. That's right. Maybe we'll do one day like
Yeah.
that and save some time for Yash over here, our videographer, that we're doing that. So in terms of like a mortgage insurance, we're talking about.
Yeah. There's a lot of options that exist
Yeah.
for clients, and
Yeah.
specifically at Vine, we actually have our own insurance offerings that you know when I have a client that is open to hearing about them, I make that referral to our insurance team at Vine. And there's a lot of opportunities on the insurance space that exist that clients just don't even know about, right? You think about long-term disability, right? You think about illness, right? Death. There's lots of ways that you want to be protected.
Before you go over there, like, I know where you're going with this, but also looking into getting the mortgage insurance or getting life or disability insurance. Which one you say?
It's case by case.
It depends.
It completely depends. With the insurance, I'll be totally honest with you, Vish. I let my guys do their thing because that's what their
That's their expertise,
area
right?
of expertise. That's why
sure.
I'll even say talk to my guys because they're going to be the ones that guide you
Yeah.
down that right path. And again, there's lots of options, and it's very easy to get roped in, especially when dealing with the banks and the branch level. Hey, you know, you should add this onto your mortgage.
Yeah.
Monthly payment's only X, but it'll protect you. Blah blah.
They
blah,
just
blah. And it's
pass
like,
it
yeah.
on like that, just like the part of it,
But
right?
the question
Sometimes
is this needed? Is this required? Is this what I need
That's right.
for my own personal protection?
Right.
Right. And I think that a lot of clients don't ask those questions
No, they don't.
because it's just very easy to say, okay, well, it's only another X amount of dollars per month. Here, sign here, and I'm moving on. Right.
The funniest thing which about that mortgage insurance thing is that even your mortgage is decreasing, your insurance stays the same.
Yeah.
Which I never get that. Like, if your mortgage is decreasing, why your payment still going to that thing? And that's why, like, and every time, like, people ask my opinion, like, that's my personal opinion again. Like, it can be different.
Like, I've had clients where I recommend.
Oh, okay.
Right. And then I have clients where it just doesn't make any sense at all. So
So what are those clients which we're going to recommend that?
the ones that could have already existing health issues.
Okay.
Right. They're ones that you would want, and again, the qualification process for
Makes
them
sense. Makes sense.
becomes a little bit different.
Right.
Right. But even a client that just says to me, Tyler, I'm somebody that is very worrisome. I don't want that client to sit in their new home
Right.
staring at the ceiling
for
every
sure,
night
for sure.
with and so for those clients, it's not even necessarily that they need to have it there.
Right.
But it gives them a lot more satisfaction and comfortability knowing that they are protected
Right.
in the event that anything ever happened to them, right? In a perfect world, everybody would have mortgage insurance because then, it makes it a lot easier,
Yeah.
right? To not have to really stress or worry. But yeah,
Right.
there's lots of cases where a lot of clients just steer away from it. And it's all personal preference. I've had clients that say no and then come back after a time of maturity and they say, what are my insurance offerings, right?
Cool. Well, we had a great conversation, but I think I still have more questions. I'm not sure how much recording time we have left over there. We have enough time, so we can keep on continuing. Now the question is about different kind of mortgages and rates available, like for the fixed rate mortgages and variable rate mortgages. Those most common one,
Yeah.
and there's one open one as well.
Yeah.
So let's talk about that and just for
Recommendations too.
recommendations.
For
Yeah.
sure. So we can even back it up a little bit and talk about at the beginning of pandemic, we were recommending variable rates
Right.
because the constant message was that rates are going to stay low for a very long time, right?
Right.
So the goal there was for Canadians to take advantage of those lower interest rates for
Right.
a long time, and we know that did not happen,
Right.
right? So we had to change our shift our focus rather onto what are the current recommendations that exist. And speaking of one of the products, so we talked a little bit about it earlier, but the mortgage and line of credit combination,
Right.
great program to take advantage of.
Right.
Lots of different banks are offering them. And I think that it can be a great sort of counterbalance, right? So you can have, if you have $1 million mortgage,
Right.
you can have $500,000 as a standalone mortgage with a 30-year amortization with an interest rate of X. And then you can have the other $500,000 as a line of credit.
Yeah.
Right. So it might help a little bit with cash flow for individuals who are self-employed or commission style based.
Right.
That line of credit portion is fully open. So you can pay off, if you won the lottery, you can write a check for $500,000 and give it to the bank. No penalties, no issues. Yeah, you're done. So there's lots of different things that exist, but I think right now the most common term length that we're seeing is the shorter fixed term solution.
Yes.
So that clients are trying to match it up where their term will come to maturity
Right.
when rates are significantly lower.
Right.
So that when they're renewing into a much lower term than what they have at this time.
Right.
So we've seen clients go for a 1, 2, 3-year fixed term. 3-year fixed was very popular for a short period of time because it was marketed as the lowest interest rate,
Right.
before you start getting into 4 and 5-year fixed terms, which nobody was really looking at. But yeah, I would say a 1 and a 2-year fixed solution right now is great. Even going on the variable side, if you are insured, right, less than the 20% down payment, you can get some very significant discounts to prime rate, which I think people can take advantage of, right? But even still, when we compare A lending rates and B lending rates and even credit union rates, there isn't really a massive difference
Right.
across the board right now.
Right.
Previously, when we're looking at A lenders and B lenders, big differences in their interest rates, right? And that's why I think a lot of people previously were having that negative stigma
Right.
associated with alternative style lending or B lending
Right.
because they're thinking, I don't want my rate to be 1-2% higher.
Uh-huh.
So now that we're kind of in line, right? It's still a great opportunity to take advantage of there. The rates are really not all that bad.
Yeah.
And then on the credit union side, you're going to get access typically to A lending style rates, right? So still on the 1, 2, 3-year fixed terms, there's still some great offers that are coming out. I actually had one lender offer a pretty decent promotion.
No, there's like a lot of option. It depending upon not only that in fixed and variable rate, it's also depending upon just like investors, right? They have some are the conservative ones, some are a more balanced, and some have a more risk tolerance.
Of course.
And I think I can give you example. It was my wife. It was she never wanted the variable. She always wanted the fix. The reason behind that, they have fixed income.
Yep.
We know we are not the business people.
Yeah.
Let's go variable. At that time, I was not in.
No, for sure. But it allows less room for error too. Right?
Yeah. So they said, I know this amount is going to go, and I'm good with that.
Yeah.
Right. I don't have to worry about for another next 5 years or 3 years.
There's a lot of those clients that still exist.
And there's people who say I'm never going to take a thing because they taking a little bit risk. At the same time, they want to keep the money free for other things. Then say, if I have to change or anything, I just have to pay 3 months interest.
Yeah.
Right.
That's really important to understand too, is the difference in penalties. That can make a massive decision or be the factor where you need to determine if you go fixed or if you go variable, right? If you are somebody that, because I'll be honest with myself personally, I can get bored of a home pretty easily.
Yeah.
Right.
So you probably want to switch, right?
So I might, and with that comes in variable options, right? Right off the bat, because if I know that I'm not, not in love with the place, I might want to have the option to move away. And if you're in a 5-year fixed mortgage, it can be very expensive to break that loan. and
But
move homes.
isn't that the other option, which is like in the porting your mortgage? There's a little bit cost on that, so people can, without giving the big heavy penalty for fixed mortgages, they can just port the mortgages.
Port the mortgage, exactly. Yep, and then you can get topped up by that same bank if you need to increase a little bit, right?
Right.
And then you can start getting into blended rates. But yeah, there's a lot of clients that have very, very low interest rates that are all coming up due 24, 25, where they want to take advantage of those low interest rates and keep them for as long as they can, right?
Yeah.
Because I know personally for me, I think I would go home and cry if I had to break, sub 2% mortgage, just because I wanted to move homes, right?
Oh, for sure.
So no, we've done a lot of porting over the last little while, but very many Canadians did do the variable options.
Yeah, but they do
when it was
exactly
when it was significantly lower.
And I know that most of the majority of the people were doing the variable.
Of course.
And I was like saying, why we don't want to take that advantage? Like, she was not comfortable. And no, I just want to fix.
Now,
so
now you look back.
We always like fix. So anyway, but that brings me to the question, and a lot of people don't ask, and they're coming with the only one mind thing is about interest rate. They never ask other questions like, what's cost of breaking that mortgage? How much penalty I'm going to do, and what if kind of scenarios, right?
Yeah. What if I lose my job?
Yeah.
What if I want to sell my house?
So, as a mortgage agent, what you recommend people to ask their mortgage agent those most important questions, right? When they're hiring.
The hope is that you're working with a mortgage agent that's going to ask those questions anyways.
Correct.
Right? But yeah, if you are very green, right, and you're coming into the home buying experience very fresh, have no real historic knowledge of what's going on. Lots of questions you want to be asking. You almost want to over ask questions, right? So definitely one of the first ones that I would ask is my mortgage portable? In this world, that's when you want to know to have that flexibility. Is that very relevant today? Maybe not, but you still want to know if that's an option for you. What happens if I fall ill? What happens if I become sick and I can't make my mortgage payments? That's an insurance conversation that you might want to have, right? What if I need to? What if I'm in a variable rate? Can I go into a fixed rate? What if I'm in a fixed rate? Can I go into a variable rate? Right? Lots of different questions that you want to ask. Again, what are all of the fees associated with this transaction? Lay it out for me on paper so that I can clearly see the differences, because the lawyer fees could be different here, lawyer fees could be different there, right?
Yeah, for sure. But I added on that one is bridge financing. That's the other one, which people don't realize, like some of the banks, like the charge, there's the admin fee, there's it. And if you banking with them, something which you can negotiate, right?
Yeah. For sure.
Those are the things which you can negotiate when you're asking those questions, depending upon, again, how good your portfolio is. Right?
Of course.
So when you have a good portfolio, you can ask those questions as well, without not only the bridge financing, but there's other options. The question they should be asking, for example, I know the TD does that. What you call the collateral, collateral mortgage.
Oh yeah.
So can you talk a little bit more about the collateral so people know what that means?
Yes, it's really, really in depth, right? And trying to explain.
But it's just if you got the 2 sentences.
Yeah. So collateral charge is going to be your standard combo charge with a mortgage and a line of credit. And sometimes it can be a little bit difficult to transfer a mortgage if you're on a collateral charge. Right. So understanding how your mortgage is charged, and this could be something that you put a little bit on the lawyer. But it also should be on the mortgage agent as well. What kind of charge am I being registered for? There's some cases where with alternative style lenders, you can't break that mortgage unless you sell the home.
Correct.
Which people have no idea that exists, even up until the point after closing. And then they try to sell the home, right? And it gets that way. So, but yeah, you stumped me with the collateral mortgage question.
I know.
I hate that.
I know, every time I say, you have so much knowledge and that's why you care and that you want to give it to. And this is what happens. We were doing that 20 minutes, half an hour mortgage, and probably this end up doing 2 or 3 episodes. So I really admire that, the quality in you. And,
for sure.
And you have that knowledge and you're able to speak and deliver that as well.
Yeah.
So, yeah, thank you. Anything else you want to add on that?
I don't think so. I think
Yeah.
we've pretty much touched on everything. What else did you have there? There was one. There was one that I did like.
Are there any strategies or options available for refinance a variable rate mortgage to fixed rate? How can borrowers prepare themselves for financial for potential future interest rate increases? What are the potential rates and benefits of converting or style rate? So here's the question, and this like the burning question people always have in this volatile market is, what do you think? Like, is the mortgage going to increase more? And if it's yes, what people have alternative?
So I think in a perfect world,
Right.
we've seen the worst of it.
Mm,
I do. There are some people that believe we might see another increase in October.
right.
I'm really trying to hold on strongly to the fact that we are not going to see that,
Right.
and go based off of the projections that we've seen the bigger banks do, right? Which the majority of the bigger banks will say that things will hold out up until Q2 2024, where we'll probably see our first decrease around then.
Right.
We're not talking about 1% decrease at
No,
that time
no,
either, right?
probably
Which I think is
0.25%.
something that's very important to understand. Probably a 0.25%.
Yeah.
It's going to take a while for the interest rates to come back down.
And so people who are just watching or sitting on the sideline, it's for them is that's not ending soon. And if you're renting, which is rental market as high as well, you probably better to put your money there and live your own home rather than just moving out. I know it's a little bit more costly now than renting, and a lot of people that's why rental market is so hot.
It's crazy.
Um,
But that's definitely something that you want to consider is that, again, we look at the amount of the pool of buyers that are just waiting for interest rates to come back down. If you take the advice of waiting until they come back down, in a year and a half, however long it takes from now, you're going to be dealing with a lot more competition. And with competition comes increased prices, right? And
oh,
value.
for sure.
So again, if you're able to get into the market today, definitely look at doing so. If it's with a credit union style partner, there's no problem with that. You're getting access to financing to purchase a home today, as opposed to waiting until that whole buyer pool jumps off the fence.
Yeah.
And now you're, a fish swimming in the ocean with millions of other fish, and it's going to become very, very difficult. So,
Well, it's not going to get easier,
Yeah.
and that's for guarantee, I can say, because we have 500,000 people coming every year, and we are 35 to, it's like, 35, 3.5 million houses short.
Yeah.
And the construction is not happening. Builders have stopped building. So this is like a cycle is going to happen. So it's really, really difficult to say that market has, because supply and demand, ultimately, that's what's going to, until the supply is going to increase, demand is going to meet like a demand. And this market in real estate in Canada is always going to go up.
I think it's a great time to buy now.
Absolutely. I agree.
Completely
I totally
believe
agree.
that. And I think that if we end on that type of note, right, now is really an amazing time to buy.
Yeah.
Have conversations with your realtor partners, have conversations with mortgage agents to help you determine if that's true or not.
Right.
Because it's very easy to listen to us talk about how it's a great time to
Right.
buy. And one might even argue that we're biased in saying
Yeah.
that now is a good time to buy.
No, it is.
But
it
have
is.
those discussions with your professionals that are in this industry and that are in this field, and even friends,
Yeah.
right? Have discussions with friends that you trust, because everybody could look at things completely differently, right? But I really believe that now is a good time to buy if you're looking at projections and you're looking at historic information. Now is a good time to buy.
Well, I know we can keep chatting, but we have to end somewhere. Like, you have appointments. I have appointments as well. So thank you so much for coming over and sharing your valuable information with the real estate wisdom.
Absolutely.
So you shared like a lot of wisdom with us. I really appreciate
Well,
it.
I hope that you'll have me back. So I really, really appreciate it.
Oh, for sure.
Thank you very
for sure. And thank you for introducing me, like, two other guys
Yeah.
who's
No,
going
no.
to be my next podcast guest
Always
as well.
happy to help.
And that's great. So thank you for watching, and I hope you enjoying this. This is our first not solo episode. Uh,
Special guest.
and the special guest, Tyler, and yeah, give us your comments and let us know if you need any information. Like we can do like a one Q&A podcast as well to answer all your questions. Tyler is always available to help. We also going to provide his contact information to you can reach out to him for any information. And you don't just have to. I know he'll love to get the mortgage from him, but even then, like just for education purpose or any question you have,
Second, third
you
opinion.
can reach out to Tyler, right?
Absolutely.
Right.
Absolutely.
So I just volunteered that to
Yeah.
people.
No, I'm always around.
But
Absolutely.
that's the thing. Like that's how I align with people and to provide more value to our clients and recycle that knowledge. So thank you for watching. Uh, if you haven't subscribed yet, please do subscribe us on your favorite podcast platform. We are available on Apple, Spotify, and if you like to watch us, watch on YouTube, subscribe there as well. Thank you for watching. This is Vishal Kapoor, your friend in real estate. If you need a good realtor, you have to interview them, you have to talk to them. So until next time, bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.